Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, we're going to be talking about 3 stocks which I personally believe are some of the best buys in the market right now. Now, if you are into that type of content, consider subscribing to the channel. I would really appreciate it. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. Now, with that being said, let's start by taking a look at my portfolio dashboard. And I do want to go ahead and apologize to you guys for not posting a video this past Sunday. I got pretty sick and lost my voice basically completely. And if you guys can hear right now, it's still pretty hoarse, but I wanted to make sure that I'm posting a video this week. I didn't want to miss 2 weeks in a row. Now, I do feel much better, and although my voice is not 100%, it's feeling pretty good right now, so I can definitely get through this video, but I am going to be making it on a bit of the shorter side just to be able to maintain my voice. Now, the 3 stocks we're going to talk about in this video are going to be ones that I do hold in my portfolio. I did not look at any companies which are not currently in my portfolio because I'm not tracking them as actively, so I'm not just going to be looking at every single best opportunity in the market, but the best opportunity out of the companies that I hold in my own portfolio. Now, if you're keeping track of some other stocks which are not in my portfolio and you think are fantastic buying opportunities right now, please leave them down in the comments below. I'm sure a lot of people will appreciate it. Now, just a quick rundown. I always like to do this on the videos. I've invested $51,500 in total. My current portfolio value sits at $65,193, which is the highest I believe it's ever been. The S&P 500 has basically just hit all-time highs, so we're definitely enjoying it. But even with these new all-time highs in a lot of these different companies, there are still some companies trading at some pretty low valuations. My unrealized gain is at $13,600 and my total return is at 26% with $1,700 in dividend earned and a yearly projected income going forward of $1,000. Now, if you do want to take a guess at which companies I'm going to be covering today, you can see all my holdings right here. So let me know in the comments down below if you're guessing ahead of time. So some of you may have seen this coming, but the first company is Booz Allen Hamilton, ticker symbol BAH, and I recently posted a full in-depth video on the company, so if you want to check it out, I'll pin it right up here. But basically, I paid an average price of $140, which looks pretty expensive now because the current price is trading significantly below that at $101.34. Now, a lot of government contractors are under a lot of pressure right now from the government cutting their spending, and Booz Allen Hamilton has been hurt pretty badly, especially in their civilian sector. Now, their defense and intelligence segment has remained pretty resilient and has grown pretty quickly, but their guidance for the next year is not so good. In total, I purchased 32 shares, and my amount invested was $4,400 with a current value at $3,200, which gives me an unrealized loss of $1,200 or about 27%, which is pretty intense. Now, I do wish I would have waited a little bit longer to start this position, but I did not want to miss the opportunity of what I believe is a very high quality company. Just to be transparent, if I didn't already hold Booz Allen Hamilton in my portfolio, I would definitely be starting a position in it personally right now. My annual payout in terms of dividend income is $70.82, which puts the current yield at 2.17% or my yield on cost at 1.58%, with my allocation of the portfolio at about 5%. Hopping into Google Finance, we can see what a tough year it's been for the company, down over 35%, and if we measure from the peak all the way till now, it's actually down over 45%. Now, in the past 5 years, the company is still positive and at some point at the peak was performing really strong at over 140% total return. Now, the price to earnings ratio is currently fairly low at about a 14, which I think is pretty fair even if the growth does slow down going forward. In terms of financial metrics, we did cover this in the previous video about this company, but you can see right here the revenue per share since 2016 has been increasing very quickly over time, and overall the earnings per share have been increasing pretty fast over time as well. The free cash flow did see a pretty big decline in 2024, but right now they've been pumping a lot of money into share buybacks and dividends, which I do like to see. In terms of shares outstanding, this graph right here shows how quickly they've been coming down, and the dividend per share, ignoring 2014, 2013, because unfortunately it's not adjusted for the split right now, but have been growing very quickly over time. Now, like most other contractors, their margins are very small, but their capex is also pretty low and their return on invested capital is pretty high at 15%, so I'm happy with how the company's been performing historically. Now, the next company we're going to cover is Google, and this is basically my largest single holding in the portfolio aside from ETFs. My average price paid for the company was $146 per share, and I brought my cost basis up a lot this year because I thought there were some fantastic opportunities to buy more shares of Google. My initial buys into Google were between $90 and $100 per share, so I definitely had some pretty good growth on this company so far. Now, in terms of how much I purchased $5,000 in total, which got me 35 shares, and in terms of unrealized gain, I have $870 in unrealized gains and 17% total return. Now, even though the company's stock price has increased once again pretty recently, I still think it's a fairly good buying opportunity, and if I didn't hold a position in Google, I would definitely be buying in right now. Honestly, if my position wasn't already so large at $5,000 or currently about $6,000, I actually would be adding more into the position. I've been pretty tempted to do so. As you can see right here, the allocation is already just at a bit too uncomfortably high of a range. It's at almost 10% of my portfolio, and I'm happy that I did so because I think this is a strong company and I think in the long run this will pay off, but I do like to manage my risk by managing my allocations to different companies. Now, if the stock price dips down below 155 again, I'll have a hard time not buying more, so I'll keep you guys posted on if I do any more purchases of this company. Now, their dividend yield is super low at 0.5%. My yield on cost is also very low, and so my annual payout is only $30, even though the position is so large. Now, in terms of performance, this company has had a pretty rough year because of the threat of disruption from stuff like ChatGPT and also some lawsuits from both European agencies and also the US. Now, to me, I saw these big dips as buying opportunities. I was buying here, I believe, around September of 2024, and I bought a lot recently here when it dipped below $150 per share. I kind of loaded the boat. In terms of 5-year performance, it's still more than doubled in the past 5 years, and I think it has a good chance of doing so once again over the next 5 years. They currently trade at a price to earnings ratio of 19.43, and if they keep increasing their earnings per share as quickly as they have done recently, the company's in a position very well to outperform the market. Taking a look at the financial metrics, you can see how beautiful these graphs are. The revenue per share has been growing quickly over time and honestly accelerating over the last couple of years, which is amazing. Same thing can be seen for the earnings per share and the free cash flow per share as well. This is a free cash flow generating machine. Now, if it wasn't clear already, I am very bullish on Google long term, and I might eat my words, but we'll have to come back to this video and see. Now, they have a pretty aggressive share buyback program, and I think I saw a post recently that said that they were back at the levels of shares outstanding that they were back in 2006. Now, one thing I do want to point out here, I usually don't focus on this graph too much because it just shows free cash flow again, but as a function of stock-based compensation eats up a lot of that free cash flow, so it's something to definitely consider when buying this company. Now, over time, I hope that this number will at least stay flat or maybe even come down as the free cash flow starts to increase, but we'll have to see where they go from here. Now, the dividend graph looks weird, but they only initiated in 2024 for the first year ever, so I'm happy that they're a dividend initiator. I think they recently increased it by 4 or 5%, so hopefully we'll see some double-digit increases in the future. The net income margin is extremely high, which makes sense because of how profitable the company is, and the capex has exploded over the past couple of years, which I'm not too happy about, but it makes sense because they're investing into their infrastructure for this whole AI race. With how high their ROIC is, I actually am not too upset about them investing back into the company. They've shown they can do a good job managing their money. And the final company that I personally think is a fantastic buy right now, and remember guys, none of this is financial advice, just my personal opinions, is United Health. Now let me know down below whether or not you guessed all 3 of these companies, and if you are enjoying this video so far and have made it this far into the video, consider leaving a like. It helps out the channel a ton. My average price paid for United Health is $400, but initially it was much closer to $500. I've only recently averaged it down because of the current price being so low. Now with this one, it would have been awesome if I had not opened the position at $500 per share. Of course, I did not expect the steep decline we saw in stock price, but regardless, my average price paid is really high compared to the current price. Just to put it into perspective, I'm currently down 24% in this position, which is about $1,100. So my amount invested is $4,600 and the current value is only $3,500. I own 11.6 shares of the company and I've been really tempted to continue adding more into this position. Like with the rest of these companies that I showed today, if I didn't already have a position in United Health, I definitely would have been opening one up at these prices. This is an incredible company and I think at some crazy low valuations. Now, I will say there is a ton of risk in the pharmaceutical and healthcare industry right now, and United Health is not immune to them. Being the biggest healthcare provider in the US, they have a ton of risk and a ton of eyes on them currently. However, if they can get past these controversies and continue running business as usual, I think the stock price will see a pretty good rebound in the coming years. Also, aside from them historically being a well-performing company, there is a lot of insider buying on this company more than ever before. I believe in the past year, insiders have bought over $30 million worth of shares, which is absolutely insane, especially since their share purchase discount is only coming in a couple months, which they might even load the boat further. In total, I have earned $50 of dividend income from this company, and my yearly dividend per share is $8.84 or $104 in total. Now, I never thought I'd see the yield this high. It's currently at 2.93%, and when it was dipping down all the way to $250 per share, it was over a 3% starting yield, which is absolutely insane for this company. My yield on cost is 2.2%, and my allocation is currently 5.5%, but I'm really tempted to add more into this position. Now, I would really appreciate your thoughts on any of these companies down in the comments below, especially United Health, because I am so tempted to add more. So let me know down below what you guys are doing with your positions and if you're adding any money into United Health or starting a position in it. In terms of performance, there's nothing else to say other than it's rough. You can see right here that it peaked in November of 2024 at over $600 per share, and it's now down over 50% from the highs. Currently, it's trading at a price to earnings ratio of 12.64, which is much more safe for this kind of industry. So if they're able to maintain their earnings, I think this is a fantastic deal. In the past 5 years, the company is just barely positive. It's a little bit unfortunate because if you look from here to the peak, it was actually performing really well at over 100% return. Now, like I said earlier, historically, this company has just been a fantastic investment. The revenue per share, the earnings per share, and the free cash flow per share have grown very quickly over time, aside from this dip we've seen so far in 2024. Now, assuming that 2025 comes back to these levels more similar to 2023 or even above it, this company might be set up really well. In terms of shares outstanding, they have been doing buybacks pretty consistently, and you can see right here the stock-based compensation is a very small portion of the free cash flow. Now, more impressive than most of their other stats is their dividend per share. They've basically done double-digit increases every year up until this year. I think they just announced a less than double-digit increase for the first time in a while. Their net income margin is very low. Insurance is a very low margin business, but their capex is also relatively low compared to the size of the company. Now, in terms of their ROIC, it's actually not bad at almost 15%. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at 3 companies in my portfolio that I think are fantastic buying opportunities today. If you guys did enjoy the video, consider leaving a like, and also let me know down below what you think of these 3 companies and if there's any other companies that you are scooping up right now at discounted prices. If you haven't yet checked out last week's video where I talked about 3 stocks that you can buy once and will pay you dividends every single month of the year, check out this video right here. And if you want to see my dividend income for the month of May, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.